Tonight's signal is not one AI story. It is 5 proof points that the AI market is moving out of the demo phase and into infrastructure, labor, hardware, and default workflow. Story 1. Cerebras. The AI chip company priced above range and raised about $5.5 billion in one of the biggest IPOs of the year. The stock story matters, but the deeper story is simpler. Public markets are now paying real money for a challenger to NVIDIA. NVIDIA is still the gravity well. Nobody serious should pretend otherwise, but Cerebras proved there is investor appetite for specialized AI compute, wafer-scale chips, and alternative infrastructure bets. That changes the conversation. Hardware is no longer just something buried behind the model announcement. Hardware is the product story. The operator read, if you are building with AI, compute is not a side detail anymore. It decides what you can run, where your data goes, how fast you can iterate, and what your monthly cost looks like. Story 2. Intuit. TechCrunch reported that Intuit is laying off more than 3,000 employees while shifting resources toward AI. This is the company behind TurboTax, QuickBooks, and Credit Karma. That makes the move important because Intuit is not a social app trying to chase hype. It is a workflow company. Tax, accounting, personal finance, small business books. These are repetitive, structured, high-friction workflows where AI can remove steps, compress support, and change what the software company needs from people. The uncomfortable part is obvious. AI is not just adding features, it is changing org charts. When a company cuts thousands of roles and says the money is moving toward AI, that is not a demo. That is a management decision. The operator read, any repeated workflow with forms, rules, reviews, and customer questions is now exposed. The safest response is not panic. It is to map the work, find the repeated burden, and decide what AI should remove before someone else decides for you. Story 3. Cohere Command A+. Cohere released Command A+ under an Apache 2.0 license. It is a mixture of experts model with 218 billion total parameters and about 25 billion active per token. The important part is not only the parameter count, the important part is the deployment shape. Mixture of experts models let builders chase stronger capability without lighting up the full model on every token. That matters for agentic systems because agents are not one prompt. They are loops. They plan, call tools, check results, retry, and keep context alive. If the economics are wrong, the agent looks impressive in a demo and painful in production. If the economics improve, more teams can run better reasoning without treating every task like a blank check. The operator read, open, commercially usable models are moving closer to the part of the stack where real work happens. That means more choice, more local or hybrid deployment options, and more pressure on closed providers to justify their margin. Story 4. Google I/O. Google's I/O announcements pushed agents deeper into search, workspace, Android, YouTube, and the phone itself. The headline is not one flashy feature. The headline is that background agents are being normalized. That is a big shift. A chatbot waits for you. An agent watches a workflow, gathers information, summarizes the state, starts a task, and comes back with progress. That is why Google putting agents into default surfaces matters. It teaches everyday users to expect software that does more than answer. There will be messy parts, permissions, trust, wrong actions, data boundaries, brand safety. Who gets blamed when a background agent spends money, sends the wrong message, or summarizes something private? But the direction is clear. Agents are moving from the side panel into the operating layer. The operator read, the next moat is not having an AI button. Everybody will have that. The moat is whether your workflow has state, permissions, logs, recovery, and a human approval point when the task matters. Story 5. AMD. AMD announced more than $10 billion in Taiwan ecosystem investments for AI infrastructure and advanced packaging. This is quieter than an IPO and less exciting than a model release, but it may matter just as much. Advanced AI hardware is not only about the chip design, it is packaging, memory bandwidth, interconnect, cooling, supply chain, and the ability to manufacture at scale. That is why the Taiwan investment matters. The bottleneck is not always the model. Sometimes the bottleneck is the physical ability to build enough systems that can run the model. This also puts more pressure on the NVIDIA-centered narrative. Cerebras is coming from one side, AMD is pushing from another. Tense torrent is drawing acquisition interest. The AI chip market is not calm, it is reorganizing. The operator read, compute strategy is now business strategy. Whether you rent cloud GPUs, buy local hardware, or wait for cheaper edge systems, those choices shape what products you can build and how much control you keep. Put the five together and the pattern is clear. AI is leaving the novelty phase. Chips are becoming public market events. Software companies are cutting around AI. Open models are improving deployment economics. Google is moving agents into default workflows. AMD is investing billions into the physical supply chain. The winners will not be the people with the loudest demo. They will be the ones who build the rails before everyone else needs them.